Cool. Welcome to the SealCast. Before we get started, nothing we're going to say this week is tax, legal, or financial advice. This week we've got Johnston of Consensus Solutions. Thanks for being on.
Yeah, thanks for having me. How's it going?
Pretty good.
Good.
How are you?
I'm doing well, thank you.
Excellent. So why don't you start by telling us a little bit about your background?
Yeah, so let's see. I graduated from college at the University of Portland a couple of years ago. So I'm young. I'm still a baby in this space.
What kind of degree?
Operations and technology management. So we did like very high level supply chains analysis stuff, and then like database design, very basic. And about a couple years before that, so I was a junior in college, I decided to buy into Genesis Mining, actually.
Oh, okay.
So I did a little bit of cloud mining and made some money and lost my wallet. I was a college kid, you know. I was being dumb.
As it goes, yep.
And so then after I graduated, I started really researching it. All of the economists that I listened to were saying Bitcoin's the next thing, crypto is going to be huge, and so I started looking into it a lot. And in the meantime, I was selling real estate. And so I spent about 3 months basically with my whole life consumed by reading white papers. I read like 75 white papers.
Yeah, down the rabbit hole.
Yeah, oh yeah, I went deep. Neglected my real estate job a lot, but no, it was good. And then I went to a bunch of people that trust me well, and I said, hey, I'd like to take some of your money from you, and you know, maybe I can make some out of it. And real shady.
Yeah, of course. Yeah.
And so I pulled in some money and started a little closed fund in the crypto space. We started off by treating it like penny stocks almost, because back then, this was about 2 years ago now.
This was still while you were in school, or was this after you
graduated?
This
was after I graduated, so like
okay.
right after I graduated, yeah. So you could buy all of these tiny little altcoins, we call shit coins, you know, and they would pump, you know, 100%, 1,000% on the day. And so we had this systematic way of selling out and putting our funds that we've earned into ETH or Bitcoin, and then rinsing and repeating, basically. Yep. And that lasted until about July last year, maybe. Maybe a little earlier. We quit doing that, and we kind of pivoted towards a more passive, long-term hodler type approach. And this was better for me because I didn't want to be a trader my whole life. I didn't want to be analyzing markets and graphs all day. And it was better for my clients because they weren't holding a bunch of these assets that could go to zero, right? And so that was that. I did that, and I still am managing it. I'm not really doing much. I'm just kind of keeping it passively in its allocations, and we trade. You know, we'll do a major move if we need to, if we see something that we don't like, or you know. And then fast forward to, so that was kind of July, we pivoted. Fast forward to January, right? You've got all this buzz, and crypto's going through the roof, and then crypto is going through the floor. And we needed to figure something out to mitigate our losses. And so I, by chance, met my partner David Nicholson, who is he worked for Microsoft for 10 years as like a cryptography architect. It was perfect on their Azure team. And I said, hey, you know, I'm looking at building these trading softwares. What do you think? And he was like, oh, I've been actually looking to get into that. I've been in crypto for a long time. And so we threw a bunch of ideas out back and forth to each other, and we built 3 different types of software that do different things. So one of them was an arbitrage bot. Another one was a high frequency trading bot, and they all still are running. And then our third one is a like a diversification software based on market cap. So think of like the S&P 500, but for crypto.
So every time something new moves in,
Mhm.
do you rebalance it, or does it automatically
No,
rebalance?
so it automatically rebalances. So we don't touch it. We don't have any part in touching it or anything. And it will automatically rebalance and there's a 5% float. So if say like Ripple has been going up and down a lot lately, then it gives a little bit of float and some time to make sure that it wasn't just a pump and dump or something like that. And the reason why we created that is we wanted something that would be fairly well pegged to the market, that people could make sense of, right? Right now in crypto, well, everything's been fairly stagnant, which is good and bad. But especially in all the hubbub in late 2017, people couldn't figure out what was a good investment, what was a bad investment, or like gains were so astronomical that 50% isn't that crazy in a day, or or negative 20% isn't that crazy in a day. And so we wanted to make something that that kind of makes sense to the average user, or to the average even just traditional financial investor. So we built that, and now we're launching. So that's
cool.
What it is, yeah.
So the beginning of Consensus was around January, beginning of this year.
Yeah.
Okay.
So we were brainstorming. We've still got a million projects, ideas to do from just those original brainstorms. But yeah.
How recently? Wait. So I know it was Cryptech Services before this, and then you rebranded.
Yeah.
How recent was that?
Yeah. So that was about 2.5 months ago. So we started as Cryptech Services. Cryptex, it's perfect, right? Crypto Index, Cryptex. And a Cryptex was like one of the first cryptographic tools back in the day. I don't know if you've seen Da Vinci Code, but like they use Cryptexes all the time to do cool things.
Forgot about that.
Yeah, and so it was a perfect name, right? And Cryptex Services was good. But then we realized after we started it that there was a company out of Russia that has it, and we didn't think there would be any issue. Our attorney told us there would probably be no issue unless we started operating out of Russia, and we just decided that it wasn't worth it to, have any liability or anything. So we changed our name. So we're Consensus Solutions is our name, and that's fairly self-explanatory. And then the product that we're selling, our first public product, is called Coinage Fund. And so Coinage Fund is coinage is the act of minting new coins. And so we thought it was just perfect, and why hasn't anybody taken that space? So
that's available right now.
Yeah, so we did it. Yeah, Coinage.fund is www.coinage.fund is where we're.
Cool. So take me through this process. Like, if I want to buy into this, what does that look like?
Yeah. So let's just say you're like my dad, and you don't have any cryptocurrency, right? Well, so what you would do is you would go and log on to Coinage.fund, make your user and your log on, and then you click all of our disclaimers and say that you agree to sign your life over to us. Just kidding. And then it would take you through this wizard that handholds you step by step on how to go from dollars into this stratified portfolio of 20 cryptos. And so your first step is you need to make a Bittrex or Binance account. Those are the two markets that we support.
Why those two?
Just because they're the most in demand in America.
Okay, that
most
makes
usership, we think, and
we
like them too. We think they're trustworthy. I know people say Binance isn't trustworthy, but I think they are for all intents and purposes. I've never seen anything that makes me think they aren't. So, and they're just available to a lot of the market, and so that's why we started with those two. With our arbitrage bot, we made a bunch of different. We've tapped into APIs of all sorts of different exchanges.
Of course,
but those two are just the best. So, so first you go through, make a Binance or Bittrex account, and then you port over your API keys from there. and we have this proprietary security software that my partner designed, and I'm not an engineer, so I don't know exactly how it works, but it's fairly robust. And so from there, you have your API keys in, then you need to go and fund your account, right? And so this is where it gets tricky for most people. Most people will go through Coinbase, right, where they just go, okay, I'll put $1,000 into my Coinbase account.
Yeah, connect your bank account.
Exactly. Yeah. And there have been some issues with that with users in the past, in that there have been limits that are set for a lot of users.
They want to buy a little more.
Yeah. There was, I mean, I had one user call me and he was like, "Hey, I can only put in $50 a week from Coinbase," and I was like, I don't think that's right, because I'm from back in the day. I can put in as much money as I could imagine.
Right.
You know?
Yeah.
But no, it was true. So so then we kind of gave the walkthrough with a bunch of different services. Gemini, Coinbase, CoinMe actually is kind of our preferred one. And we walked everybody through, or you through that. It spits out the Bitcoin wallet address, because we've tapped into your API, or into your account through the API, and then you just copy that and paste it in your say your Coinbase account, and send the Bitcoin over. And it goes through the blockchain and arrives in your wallet on Bittrex or Binance, and then we stratify it within a few hours, so it gets diversified into whatever you choose, the top 12, top 15, top 20 coins, up to the top 50-ish coins. And then on top of that, say you're very security conscious.
Always.
We have some services that a lot of competitors don't offer, in that you can link with multiple exchanges. So you could have half of your funds in Bittrex and half of your funds in Binance. So that if there's ever an exchange hack, you're not affected, right?
Yeah.
Or you're affected, but you're affected less, right?
Yeah, you're diversified in a sense.
Yeah, and then we also allow for offline, like cold storage holdings of your Bitcoin right now. So with that, you can hold roughly 50% of your funds offline, because Bitcoin is roughly 50% of the market cap right now. So
who specifically are you targeting with this product, or what problem do you eventually hope to solve?
So I'll start with targeting first. So at first we're trying to target mostly users who are new to crypto, have some maybe, or but aren't familiar enough with it to take it to the next level, and bring 20 cryptos into their portfolio. Especially like risk averse people. They're gonna want to have more than one holding. They don't want to just hold Bitcoin. They don't want to hold just Ethereum. I mean, you've seen what happened to Ethereum the last few months, and so or Bitcoin Cash, any of them really. But there's most people. It's a very easy, like a tangible things, since they know, the S&P 500 is the top 500 companies in America. That's what it accounts for. And this is very akin to that, in that it accounts for the top 20 or the top 30 or whatever you want to hold. And so that's pretty cool. And so that's kind of our main target. We've got kind of secondary markets, target audiences. Traders are kind of another target audience, in that most traders in this space seem to be fairly risk prone. They seem to want to risk a lot to make the big bag. That's fine. I've done that before and lost a lot of money and made a lot of money, and that's how it works. But there are some issues with that, and most Wall Street type traders are not looking at it that way. They'll use very, very extensive risk mitigation tools, And so so this is one way in which they can mitigate their risk. Just like a trader on Wall Street might hold, 50% of their fund in a couple of index funds, a trader could do that with our service. And that way, when they make their individual trade, say they trade 20% of their portfolio, they're only risking maybe 2% if they have a 10% stop loss or something like that, if that makes sense. So yeah, so that's kind of the target that's one of the targets we're looking at. And then what was your second question?
Sorry. Who are you targeting, and what problem specifically are you trying to or what problem are you trying to solve with Consensus Solutions?
Yeah, so with coinage in particular, we're trying to solve a lot of the onboarding issues that you have, and I can't talk too deeply about the partnerships that we're building, but we're building partnerships with basically Bitcoin brokers, money transmitters, and exchange services. Yeah, so that it's easy for somebody like my dad to go from dollars to 20 different assets, or one or five, but that in and of itself is really hard for people to do today, and we're trying to help solve that, bring more people to it.
So when someone buys an index of, say, 20 different assets, are they still liable for the trading fees on each to get into each of them?
Yes.
Or it's not like a regular index fund where you just pay one fee for the whole thing?
Yeah, no,
How do you
know
about mitigating that at this point?
No, that's good. Yeah, so that's actually why we use Binance, is because we have another feature in there. We've got all these little cool features that do kind of cool things that are kind of overlooked.
Working it in there?
Yeah, but so we do have one feature in there, and if you have Binance, you can specify to have a small amount of BNB.
Yeah.
So that the trading is done through BNB, so your fees are mitigated. There's not a lot of trades that go on. It's maybe 1 or 2 or 3 a day, and so it's kind of a more long-term buy and hold type of software. But so you're not incurring a whole lot of trades and trade fees with that. So that's kind of the answer there.
So how does this differ? There's some pretty big news recently around Coinbase releasing a bunch of new products, and one of those was you can now buy a bundle of assets, basically an index.
Yeah.
So how is your product different from theirs?
Yeah. So there's a few differences, and I'll just go through them one by one.
Mm-hmm.
The first and biggest is that we can buy across a ton of assets. 50 plus, and we could go even more than that if we wanted.
Yeah.
There doesn't seem to be much reason to go more than that at this point.
Yeah.
But there may be in the future with some of our upcoming things that we add in.
Yeah. I mean, from an investor standpoint, like if I had different goal, like if I was an investor and had different goals, like why would I buy your product as opposed to theirs?
Yeah. So that's one reason, and then the second reason is another reason is your risk is mitigated with ours. We would say better than theirs is because of this, because we can diversify across exchanges and into hardware wallets, and so you can hold basically half of your funds in your own wallet, and so you have control over your keys, right? That whole argument.
Yeah.
And then you can diversify over multiple exchanges. So if there's ever a big hack of Coinbase, right, then you could be out of luck and lose a lot of your funds, which I know there really hasn't been, and there probably never will be, but that's always a risk that's present. With Binance and Bittrex, if one of them got hacked, then you would only lose half of your funds as opposed to, or if you have 50% of your funds in your hardware wallet, then you've got 25 in each, so only a quarter of your funds are gone, as opposed to all of your funds being gone if Coinbase is hacked.
So you guys keep custody of
No.
funds? Okay.
No, we do not. So we are not a custodian, and we don't intend to be a custodian. We're merely a software as a service provider.
Okay.
And so the user themselves and the exchange are the custodians, and that relationship is their own, and we just facilitate the trades that the user has signed up for, basically. Yeah. And so. Yeah, so that's another reason why we're a little different than Coinbase's bundle service, but yeah.
So how are you approaching scaling the business? Like, where do you go from here?
Yeah. So I'm having conversations with marketing people all the time. That's kind of the first step. So let's step back. On our back end side of things, David, as I mentioned, he's the architect of it all, and he worked for Microsoft and Azure for 10 years. And Azure engineers over-engineer everything.
Really?
And oh my gosh, yeah, it's incredible. And so he's built out this system that can scale very quickly, just merely by adding servers, basically. And so from the back end perspective, it is really smooth, and we've found with our stress tests that it's worked really well, as well as we could ask for. And then from like a marketing perspective, so we're kind of going to be launching our marketing in the next few weeks here, all of our everything that'll be going out, and we're going to be testing a bunch of different channels and seeing how everything works, testing different targets and markets, and so right now I can't talk a whole lot about that, but yeah, we plan on having between 10 and 15,000 users in the next 3 to 4 months. So
okay,
yeah, through our marketing push. So
that's exciting.
Yeah, it's fun. Yeah.
So are there any, as a company that's providing, well, I guess you're technically a software company, not providing financial services.
Yeah.
But are there any regulations that you have to keep in mind when you're thinking about marketing?
Yeah, definitely. I mean, we can't say, like, I don't know what we can't say right now. I'm not an attorney. I don't have my attorney in the room. But
you
like,
do have to be careful about it.
Yeah, we can't say we're a hedge fund or we're a fund, or like we can't say assets under management, stuff like that, and we actually changed. So this we started off thinking that we would charge a fee, a small percentage-based fee, like 1% or 2% fee.
Yeah.
And we thought about that a lot, and we talked with attorneys, and they advised that it'd be better not to do that because you could be seen as providing financial advice or looking more like a financial advisor if you're doing a percentage fee. So instead, we switched to a subscription-based model. So the user licenses out the software. We just provide the software, and the user licenses out, sets the terms, whether it's 10 or 20 or 15 cryptos that they want to hold, and then it's a tool that helps them invest, basically. And we don't hold custody. We don't touch custody. We don't want to. Maybe one day we've got some interesting talks in the works about doing that, but that'd be 6 months to a year out. So, yeah.
That makes sense. So what's your experience been like dealing with regulators so far?
Yeah, so for coinage, we haven't really had to deal with regulators, which has been nice. We've got a couple of attorneys that we've actually got one attorney on the team that have advised us fairly well, so that we've been able to navigate the regulatory environment pretty well.
You're anticipating having to deal with any of that coming up? Or?
Not a whole lot yet. No, yeah. And the reasons why are there's a few. One, we're not custodians, and so that takes a lot off of our regulatory burden plate. And then the second is ours is a software as a service. We're not actually giving any financial advice or anything of that sort. It's a tool that users use to to invest with, right? And so so that has kind of mitigated a lot of regulatory risk too. And then the third thing is we're charging as a subscription basis, which is kind of just an extension of that second thing I just mentioned. Instead of charging like a 1% fee or a 2% fee or a performance-based fee, those we've seen in some of our competitors' products, and our attorneys definitely have said that they could get people into hot water with regulators. So
interesting.
Yeah. So we decided to not go that route, even though we actually probably could have made more money and done better for our customers.
Yeah.
We just it's not worth it.
Yeah.
Which is a bummer with regulation.
You do what you got to do.
Exactly. Yeah. Jump through the hoops. So yeah,
for sure.
It's good.
Cool. So I had another question. I was speaking with someone recently who's designing a mining product, and he said something that kind of stuck out to me, that a lot of what they're working on right now is anticipation of a coming bull, another bull run. Obviously, like I know, for example, I had started writing about crypto early on in the spring of last year, and then when things started getting crazy around July, all of a sudden all of my posts were getting 3 times as much attention as before. So how much are you guys working on designing a product for right now, and how much are you anticipating this being a product that people will come to use in the future?
Yeah, so so we spent a lot of time thinking about this question because it could be the success or the failure of the product potentially. If we go in and there's a huge bear market, then the product could just fall flat, and because no product's going to do well basically in this unless you're shorting. And so but then there's also how much time do we have to wait, how much time, and so we actually did kind of put it off a little bit, a few weeks here and there, and finally we just sat down and decided, look, we need to go with this. We've got a working product, it works great, it does exactly what it's supposed to do. We haven't had any issues or no major bugs whatsoever, so let's just go to market. And that has been a little slower than we anticipated we would ramp things up, but that's how the game goes right now. And we're starting to actually see more signups right now in the last couple of week maybe, and I think it's probably because there's a lot more green on our graphs, to be honest. It's it's a lot. We're seeing 15% gains over the past 14 days or 30 days versus dollar, and a few percent gain versus Bitcoin. I looked the other day, and it was the first time that we had all of our graph time periods, which is 7-day, 14-day, 30-day, excluding the all-time. And then we've got Bitcoin and US dollar, and all 6 were green, which was really cool. It was really good to see that everything is performing better than the comparative metrics, I guess. So so that's that. And we've thought about comparing it to other things too, like the S&P 500, but it doesn't make sense at this point. Crypto's its own thing. Everybody knows it is, and everybody knows it's riskier. So we're definitely we're putting it out right now, but we definitely anticipate a lot more growth when there is a bull run, whether that's tomorrow or whether that's 6 months from now or a year from now. I'm not going to tell you that Bitcoin's going to 50,000 by the end of the year. I'm not that guy. But we're anticipating it, and we're excited for it.
So speaking of the crypto markets, given that until now we have seen a relatively high degree of correlation between the prices, how much can you actually mitigate risk with diversification between altcoins? Is that actually
so this is kind of the next step of our product. So I'll just talk about it. I don't talk about it much publicly, but so I right now am racking my brains trying to figure out how to integrate modern portfolio theory into our software. And so what modern portfolio theory is it basically says that if you spread your assets, or if you spread your funds into multiple assets that are maybe negatively correlated, you can mitigate risks, or correlated in different ways, then you can mitigate risk basically down to zero. And most portfolio managers say you need between 15 and 20 assets to do this with traditional financial instruments.
And that's spread across equities, bonds, different classes?
No, usually just in one asset class,
okay.
so like equities or like bonds, something like that. And this is what ETFs are doing. This is all or mutual funds. This is what they do. They try and mitigate their risk by diversifying into multiple assets. And so what we're trying to do here is a couple of things. With modern portfolio theory, we're trying to integrate that so that our risk goes down from like a volatility perspective, and that's really hard to do in crypto. And I'm working on it.
Okay.
So we'll see how it comes. I'm actually fairly confident that we can find some cool portfolio combinations, but you are completely right in that most things are correlated very heavily with Bitcoin. So that's that. And then from a diversification standpoint, your risks aren't necessarily only like gains versus losses. You run risks when investing in an asset that maybe there's a fatal flaw in the asset, like the Dow hack back in the day, or something crazy that makes the price shoot down.
Yeah.
Those risks are present in equities, but they're way more present in crypto.
Absolutely.
Right? And so, the top 20 projects, I'm not going to start naming projects that I don't like
Go
or
check
whatever.
CoinMarketCap.
Yeah, exactly. There are certain projects that do bear more inherent risk because of simply they're young, they're new, the teams are poorly developed, or whatever it may be. And so this software does mitigate that risk. Or even if there's some issue with Bitcoin, there could be something that some bug in Bitcoin's code. I don't think there is. Most people don't think there is.
I mean, there was a big one that got exposed a couple weeks ago.
Well, yeah.
I mean,
yeah. But and we've thought of there are other risks to Bitcoin, like the uniformity of all mining machines. Like basically, all mining machines are made by they're S9s made by Bitmain, and that could pose a risk if there's some sort of flaw in Bitmain's S9 to take the hash rate offline. There are still these risks with these individual projects, and we're trying to mitigate that, I guess.
So are there any projects that are particularly interesting to you, or doing interesting things lately?
Yeah, there are. There's a bunch. Let's see. So I actually have a spreadsheet at home. This is pretty funny and nerdy that I did this. I'm just stupid. I was bored in the winter, and I made a spreadsheet of basically all of the top 100 cryptos after I had read a bunch of white papers, a bunch more white papers. I made a spreadsheet of the top 100 cryptos and kind of what class, like subclass they were in, whether they were like a privacy coin or like a smart contract protocol, like Neo or something, or like a like something that is trying to help mitigate friction in the banking system, like Ripple. Yeah. And so I went through and made this list. I'm not saying Ripple's cool. It's just an example. So I went and made this list, and I went through all these boxes and was like, oh, these are proof of work, these are proof of stake, these are this. This team, I just arbitrarily rated teams based on my research. And I tried to find some sort of correlations. And last year I found, like in 2017, privacy coins were by far the biggest gainer.
Okay.
Like blows everybody else out of the water, like 2000x the average privacy coin. And other currencies were not fairly far behind, like Dash or coins with masternode systems and DAOs were also really big gainers.
Cool.
Some of the banking coins weren't. And so I went through from a financial perspective. That was really interesting to me. That last year it seemed to be all about privacy coins, which I had never heard that was such a in-demand thing. Nobody talks about that.
Yeah, especially here in the States.
Yeah, it's just not interesting to most people. Like Monero, who cares? Which I think Monero's sweet, but I think this year, or kind of the most sustainable projects over the next coming years are going to be like heavily governance-focused projects, which sounds weird, and I think I'm kind of an outlier in that thinking. But I've seen one of my favorite projects right now is RLoop. RLoop is they're basically a DAO that was created on Reddit, and
cool.
So it was all these guys. Elon Musk, talk of town these days.
Of course.
Elon Musk, with the Hyperloop.
How long ago was this?
This was a few years ago. So Elon Musk with the Hyperloop decided he was going to put bounty systems on like different milestones in the Hyperloop project. So like if somebody could make a pod that's vacuum sealed that can withstand X amount of Gs or whatever it may be. And so all of these engineering firms were like, okay, we'll send a guy. Like he can just go do it in his free time or whatever, like the intern. And what RLoop did instead was it was the subreddit Loop. And they basically made a social place where all these engineers from all sorts of different fields, like electrical engineers, physicists, you name it, they had it. Project managers were running the whole thing. I don't know. These guys are brilliant. I've talked to a couple of them, and they're like, they don't stop. It's incredible.
That's cool.
But these guys, they have won 2 of the, 4 or 5 bounties, and they've broken, they've got 4 kind of outstanding achievements. I can't name them off the top of my head, but they've shown that you can efficiently socialify technological improvements, and they've started to add economic incentives through their blockchain to it too. And so I think this is a really cool thing, and it may be that we start to see in 10, 15 years the company model go away and then more of like a DAO approach start to come in and take it over. We may be able to organize ourselves better and our productivity better in this way, as opposed to having this totally structured hierarchical company like Microsoft or whatever, Google, Amazon. And it's a lot more horizontal, right? So you've got all these developers, and there's no guy on top. There's nobody on top, right? It's just a bunch of developers working together and builders working together to build this product that they all believe in their spare time too. Like it's not like they were paid to do this really, and they do a killer job of it. And so that's a really cool project that I would definitely check out. Other projects, Digix DAO is interesting. They are a DAO. Yeah, and they do.
They've got a product with gold, don't they?
Yeah. So they do gold-backed tokens.
Okay, kind of like a stable coin.
Kind of, yeah, but with gold.
Stable,
yeah, exactly. And so I've been thinking a lot about that, and I've got another idea that I can't talk about, but we may pursue soon that has something similar to that.
Okay.
And yeah, it'd be pretty cool. And then, let's see. I don't know. I'm trying to think of some others.
Yeah.
I don't know. There's a million cool projects. I'm not actually as big into stablecoins as everybody is. I don't think.
Why not?
Well, I think most people are. I don't believe it. I think the Federal Reserve is the worst thing that's ever existed.
Really?
So, yeah.
Okay.
And so I think most stablecoins, like these fiat-backed stablecoins, are just an extension of the Federal Reserve. and then I think that the crypto collateralized stablecoins are basically just asking to get hamstrung, because and then I think that like the faux Federal Reserve, where they issue coins and then issue bonds when the price goes up or down, fluctuates. It's just like a mini Federal Reserve.
Yeah.
And so I think nobody's created a really cool stable coin that's going to last for a really long time. And by long time, I mean be bigger than the the financial system, be bigger than the Federal Reserve.
Mm-hmm.
Which, that's a huge thing to ask, obviously.
Yeah, certainly.
Yeah. But I haven't seen one, and I've thought a lot about it, and I've thought about a couple of different ideas that could become one day. But yeah. The other thing about stability is I don't think pegging to the dollar is very cool.
Just doesn't excite you?
No.
No.
But a lot of people think it's great, and I do think it's good, and it's necessary for the next couple of years to bring more people into it. And I'm not knocking stable coins. I just there's just so much hype around it. It seems like I go to a blockchain conference and half of the talks are about stable coins. And it's like, okay, that's cool.
Yeah, but where's it going? What are the actual useful applications?
Yeah, and there are. I mean, there definitely are. We've thought of some cool projects with them, but it's not. It doesn't need to take up all the bandwidth of the whole conversation, I think.
That's fair.
So,
All right, you mentioned you're not a fan of the Federal Reserve. What do you think about accredited investor requirements?
So I don't have to really deal with that right now, but I do think I think it's stupid. I don't know if I should say that. But
no, go for it. I see both sides.
Yeah.
And I tend to lean against personally, but
no, I think it's a waste. I think like the argument that last year so many small time users got screwed by
new
ICOs.
traders.
That's true, but they'll never do that again. They'll never. I mean, maybe they will, and then Darwinism. But they'll learn. Everybody will learn. People adapt.
Yeah.
And so once one round of this huge ICO craze goes and a lot of people get screwed, then people are going to stay away from ICOs. And we've seen that a lot. I mean, even though ICOs have pulled in more money this year than last, we've seen smarter ICO projects. Basically, not very many in the United States because people are worried about this. But also because I think people are quick to recognize, like, oh, I'm not going to do that. I lost $1,500 buying into some ICO last year. So I don't know. I don't think. And the other thing is, I met plenty of accredited investors. I have in the last year who have gotten absolutely destroyed by ICOs. So I think I think there's a lot of things there to unpack, but that's kind of my 2 cents.
Yeah, I'd be curious to see if there's any actual evidence saying that people who meet accredited investor requirements are better at allocating resources than somebody who isn't as.
Yeah, and maybe they are. I mean, maybe they are. Maybe that's why they have so much money. And but I don't know if that means we should cut out all of these little guys from being able to invest in projects.
I mean, there's plenty of people who just get born with money too, and they're definitely not better at investing than someone who's poor and has actually researched it.
Yeah, definitely. I was talking to a guy today who mentioned that he was talking with some Bitcoin billionaire, some big whale, and the guy will just throw like $5 million at a project just because he thinks it's cool. And it's like, that guy is an accredited investor, but he makes way dumber money decisions than me, who makes hardly any money. It's just ridiculous. I think.
If anything, you almost have to. When you don't have that much money, you almost have to make better decisions with it.
Yeah, definitely. Yeah, so, from a certain perspective, I think. But we don't have to worry about it with our stuff. But we've definitely had conversations with companies about building out products for them, and that's probably the number one concern with them pulling in equity is, like, how do we go about this? It's just it's a total headache, and it's a $50,000 to $200,000 headache for most companies, which I don't know. Most companies can't afford that. So,
Yeah.
Yeah.
Absolutely.
Yeah. Yeah. It's one of the biggest stiflers to innovation, I think. Reg D and Reg A plus, and all the Reg A plus. You don't need accredited investors, but
Cool. Well, I think we've had a good podcast. Should probably wrap this up.
Yeah.
Go get some lunch or something.
Yeah, absolutely. I'm hungry.
Cool.
Yeah,
Well,
thank you for having me.
hey, thanks for coming on.
Yeah.
Been a pleasure.
Yeah, good to see you.
Definitely do this again.
Sounds good.
Cool.